Hey traders, this is Christian from Hertz Trade Group, and this is your end of day and end of week recap for Friday, July 16th. So today, of course, we'll review the price action and go over some of the things that we saw on the screens today, some levels to watch and so forth. Risk disclaimer in front of you: everything that we're going through here is for information purposes only, not giving out any advice or recommendations. Everything that we're going through here is for education purposes only. So decent washout day, but you look at the you look at the one-day moves, and really not that big of a change for the day. And S&P and the Qs, to me, we'll review the charts in just a second. Just look like a little bit of a pullback. Small caps are a different story. We'll go over the small caps chart again. You could see what I have highlighted there is, what's particularly been painful about some of these moves that we're seeing is that, this morning we even tried to rally pre-market, and as soon as the market opened, it was basically just straight down. We saw some big SPY prints that went up today. A couple 2 million share block prints. I mean, really, some big block prints that went up. So it looked like there was a bit of liquidation, quite a bit of liquidation going on, and perhaps through the ETFs. We really haven't seen that too much. We really haven't seen much of that at all. In terms of ETF selling or major volatility. It's been a lot of things that have been going on under the hood. So let me just bring up block trades for the SPY, and you'll kind of see what I mean here in just a second. Just waiting for Thinkorswim to bring that up, but the price action, yeah, I mean both the Qs and the SPY were not even down 1% for the day. The IWM did what it's been doing, is underperforming. Both that and microcaps were both down 1%. The VIX was up about 9%. We'll go over sectors in just a second, but I just wanted to show you a couple of these trades that went up. You could see one in particular, two in particular. Looks like one was maybe canceled and rebooked, which was the 2.7 million shares. And then there was another one that went up for this one too, which was 436.05. Unless they rebooked these because they had the wrong price, it looks a little fishy to me. But nevertheless, there was one print of 2 million shares that went up later in the day too, and it did. Like I said, we really haven't seen any heavy outflows in equity ETFs overall. So that's something that is one of those boxes that probably needs to be checked when you start to get a market dip correction. There's various different things that we normally see. I don't know if we can basically check all those boxes. So while we did have a decent washout today, it's a little bit too early to say that a rebound is coming. Again, all we're doing basically here in S&P is just a reminder that we were overbought basically coming into the week. Where we were a week ago was this big green candle. So we've now given some of that back. I look at S&P futures. When some people look at a SPY chart or an SPX chart, they notice that there was a small gap that was filled. When you look at the S&P futures chart, you just don't really see any gaps. The level that we talked about a few times this week was 43.50. We were just here basically, in the morning. So, these things can happen rather fast. But again, you kind of look at this, and there's really not much technical damage being done here. So it's tough because I know people want to see at this point, considering how bad some of the price action bit has been in sectors, they want to say at this point, hey, we're pretty oversold. But again, you look at the Qs and IWM, and you just don't have that. You've got us coming off the highs, and remember how overbought the Qs were for about 2 weeks, right? You look at the RSI. So again, I wish I had some better news here, and I'll try to put a positive spin on it. But remember, we got to about a 76, and then came back and checked back here to the 70 RSI line, and we went to a 75, which is really overbought. So the best, being as objective as possible, basically just saying, hey, we just burned off all those overbought levels, the last 3 days. Now we haven't had much of this type of move in a while, but that some of these things, after a big upswing like this, sometimes you do come off those highs pretty quickly, and I think that's what we have going on here. Notice as well that we basically got the MarketWebs was a really good roadmap for the day. Notice that we rallied into that top of value. So again, like this is why the value areas are so important, and volume at price, right? So again, this week's value area was based on last week's price action, right? You can see the shaded value area, the shaded market profile. What we're doing is basically drawing about a standard deviation of a value area based on that volume at price, and look at how important it is, right? We hung in there for a while. Look at where we rallied right into resistance, right? And we came all the way back down, and you could see, they basically try to pump the brakes at the end of the day. We didn't break through with all that might to the bottom of value, but we did close right below it. Next week we'll probably open up below value. It should be interesting, I think. Looking at where what futures are going to do Sunday night going into Monday morning. There's going to be a lot of people watching futures on Sunday night. Whenever the market sells off into the close on a Friday, you're going to see people really glued to their screens Sunday night to see where futures open up. IWM, again, this has been where the damage has been for the most part, as well as if you want to look at, before we get to the small caps, if you want to look at the equally weighted the equally weighted S&P index, right? That looks different, right? That looks like it's breaking down. That's the first break below the 50-day moving average as well. So it kind of just paints a different picture. Remember, the S&P is market cap weighted, and some of the bigger names, especially the names like Apple and so on and so forth, some of the bigger tech names have been holding up pretty well. Like, take for example Google today. Google, some of these names look really healthy, and Google's how much is, so anyway, Google's, I'm not going to calculate it now, but both Goog and Google are in the S&P, and they're a decent weight, so they skew that. But yeah, you look at the RSP, and that does not look good to me. You look at IWM, right, which we know has been going back and forth on this range. This also doesn't look too healthy here, right? And the other thing too is, that weekly bar looks horrible for IWM. But what's very difficult, I think, with this market right now is, we're not coming in and being, starting the session down 30 or 40 basis points. Today we were up the opposite. So that again makes it seem, when you go back to my spreadsheet, it makes it a little bit worse, right? Because some people are buying on the open. Some traders like to buy on the open. If you're doing that, then you're getting the full brunt of the move. And for IWM, from the open, was down 2.2%. And you could see SPY Qs, they were down as well, just a little bit over 1% from the open. So that's particularly damaging. Another chart that I looked at too, like I said, I try not to be, I'm trying not to be super negative here, but another one too where we really haven't seen a jump in credit spreads. They're not, they're coming off low levels, but this would be something that I would begin to watch. If you look at a 5-year chart. So again, they're coming off a very low level, but they did widen out a little bit, right? And the credit market will sometimes show when there's issues coming to play for the market. So I would say, I'm not an expert on credit spreads, but I do know a little bit. I know enough to get by. And unless we really start doing something like this, right, then there's something a bit more to worry about. This, just coming off a low level, is kind of somewhat normal. So again, these are things to kind of keep an eye on, right? If we see this spike up in the next couple weeks, then you know that we've got a bigger issue on our hands. If this just ends up being a little bit of a move up from the lows, then it's not that big of a deal. So, the conclusion of what I'm kind of coming around here to, which you'll hear me talk about in just a second. But yeah, I think we need a little bit more time, right, to let this play out a little bit. Interesting. I don't really know what's going on with the energy names. I don't have any exposure to any of the energy names, either in my trading account or in the TTG Trend Portfolio. But I've been watching these things. I was talking about OIH today, and about how this has really broken down from the highs. I mean, just a few weeks ago, this was one of your better performing groups, had relative strength to it, was looking really good. And this last move, people like to see big volume. Well, you got this big volume, and that was the last, basically big thrust up here. And it's a big move down. So someone asked, I mean, there's a VPOC down there that's that's close in sight. Maybe you see a little bit of a bounce off of that, but man, these things are coming down quick. I mean, these were your worst performers today. XOP down 4%. Now again, they're not a big portion of the S&P, so they're not going to affect it that much. XME too was a darling of the market, for about what? A good 6 months or so, really in a nice steady trend. And this was something that I was long in the TTG Trend Portfolio, and thank goodness I got out of it, because this does not look good. Now maybe again it might bounce off this virgin point of control, but one of the things too, like I think to pay attention to, and I talk a lot about this in the trading room, is the 50-day moving average. For example, this and a lot of other stocks, particularly, some of the cyclical stocks that we've seen that have had really strong rallies over the last 6 months, they've been honoring this 50-day moving average. Once you break the 50-day moving average, if you don't retake it very soon thereafter, this is what could happen, right? You have a retest, and then it kind of hangs around here for a little bit, and it's resolving to the downside. We've talked about a couple of the other ones too, like the materials group, right, that broke the 50-day moving average, has been hanging around. But the more this thing kind of hangs around like this, it has a chance to really kind of roll over. And you could see the 50-day moving average as well rolling over here. So these things are not the best, not the best sign. Financials, similar aspect here too. Looked great for a number of months, strong trend, kind of continued to grind higher. First break of the 50-day moving average, right? This thing went lower, and even if you got caught in this, you had a chance to get out, basically when this retested the 50-day moving average, and that's kind of what I did. I was also holding XLF in the TTG Trend Portfolio, and I think I got caught in this, and then I substituted out like once we came back a little bit. So he definitely got a little bit of a chance in some of these things. So if value names, right, and you could see a lot of these groups, the banks, the metals and mining, the energy stocks, right? These are all value areas, right? And I was talking a little bit about value versus growth yesterday. That's not what's doing particularly well right now, right? It's not. This is different than what we saw months ago when there was a rotation out of growth and into value. This is not what we're seeing right now. And you could see how close value versus growth is, right? And we looked at those charts in yesterday's video. This is more of a rotation into low volatility equities, right? And you could see, utilities started, I think, to be on people's radars this week, and they really got going this week. And I think for the week, I've got the weekly performance up here. Utilities were the best performing sector for the week, which was up 2.6%. So again, that's something different, right? We haven't really seen the low volatility, really defensive groups lead. Well, that is what we have now, and this is a chart that I've showed now a couple times in these videos, but I talked about how it might not be a bad place to to be right now is in this low volatility group. And you could see the relationship between low volatility and high beta. It's important whenever you're, in my opinion, it's important whenever you're looking at one of these ratio charts, is to look at how the charts look individually, right? So this is SPHB, right? So high beta, again, it's got a bad look to it, right? It did take out a virgin point of control, but there's another one here. I could see the second one being that they're so close to one another being taken out. So what's in here? Well, there's solar companies, there's Teslas in here, just, anything high beta is in here. You look at SPLV and it's breaking out to the upside. So again, it's doing something different. Again, not something that we have really seen. I think, if you go back to this chart, you really haven't seen this rally like this at all this year, except for the beginning or the end of January. Right, you saw that and then it kind of faded. So this is why I think, and kind of the conclusion that I'm getting at here in this video is that, I think you have to be patient. And also keep in mind, we're going to have a lot of earnings reports in the next couple weeks. Pace yourself, right? I mean, it's very difficult right now, as I mentioned, if you happen to buy something around the open today, you got absolutely crunched. And, especially if you're not following, stops, and if you're trading a little bit more options, I've been doing that here and there. Like, I'll take a shot on an option and it will be something small. And I'm just amazed at how quickly, the market is moving. I had bought some Microsoft options earlier today. And I always show the trade blotter for what I did for the day, but it's amazing how quickly I was watching. I said just in a few of these calls for next week, and like all of a sudden, like within like 5 or 10 minutes, they were marking out like $1, and I was like, whoa, the market is just moving way too quick. So, when I do these things like purchase next week's call options, it's always a small size. I've just learned my lesson with this stuff. You could see me get out of it an hour later. It actually was bouncing around. This option was going from like $1 up to $1.50, and I made a bad decision not to get out at cost basis. But hey, that's just how it goes sometimes. And going back to the adjustments that I've been talking about, starting with I really pounded the table on this towards the end of last week, and in the macro video that I sent out publicly, this on, I believe on Saturday, I sent that out and retweeted it on Sunday. I talked about making adjustments in a tough tape, right? Avoiding short-term option risk, or if you are taking short-term option risk, you got to do this. You gotta have a smaller position. The volatility is just too much in the single stocks. Even though we look at the VIX, which I also wanted to look at in this video. Right now, again, we saw a big move today, but we're not even above 20. So that's kind of the good thing. Like the VIX didn't jump up to like a 24, 25. We're up to an 18, right? And that's still not, higher than any of these peaks. So, there's some things that are not horrible. I don't like how a lot of the charts look. I don't like what's been going on. I have, I think, made it through about 18 minutes and haven't mentioned market breadth, but I think really that's something that you're going to want to keep it. We're going to want to keep our eye on next week. Right, and we saw this now a couple days this week, where I think it was Wednesday as well, right, where the breadth started the day positively and then flipped. And that's not what we want to see, right? And here was Wednesday, same thing, positive. Now the selling pressure wasn't the same, but starting positive breadth. And then seeing it deteriorate over the course of the day is not something that we want to see. So this has been going on now for 3 weeks, I think, give or take. And it's one of those things where you could guess right now when the buyers are going to come back into this market, when we're going to see positive breath. But guessing, in my opinion, is not something that we really want to do too much in trading, right? You could certainly put on some trades, that have a higher risk to reward ratio, but we don't have any confirmation. We just have not seen a day where breadth has been strong now for a couple weeks. And that to me is confirmation that when you have more advancing names versus declining names, not only is it confirmation that something has changed in the market, but it also kind of tells you how difficult the market is, right? And every time we see this horrible breadth, that you're trading, you're completely going against the wind, right? Again, the analogy for market breadth to kind of help a little bit is when we have strong market breadth, when there's more advancing versus declining names, the wind is at your back, right? Right now, and for the last 3 weeks, the wind has been squarely in your face, in terms of what's been going on in terms of advancing versus declining names. All right, so this video is about 20 minutes, not 20 names, 20 minutes. So here was the week's performance. Again, the small cap's the big issue here. But like I said, with value and growth, I don't think that this is a value versus growth type thing right now. This is more of a risk off type thing. And if you look at these groups that led this week, utilities, staples, REITs, healthcare, also up there. Your 4 top sectors can all be classified as somewhat defensive. Definitely utilities and staples are defensive areas of the market. They fall in that low volatility bucket that I mentioned. And then look at the carnage in some of the higher beta areas of the market. And, again, not just cyclicals, a little bit everything, right? Oil and gas, both of those ETFs, oil services and the equally weighted one, down well over 10%. That is nasty. Cryptos, completely separate, different reasons for that, down almost 10%. Pot stocks, down almost 10%. Solar stocks, clean energy stocks, down well over 8%. So again, doesn't matter if you're in clean energy or dirty energy. Those both did horrible. Retail, which has also been a strong point up until recently. Let's take a look at that chart. Yeah, that's rolling over too. That's now below the 50-day moving average. I didn't see that until I didn't catch that one. But this has been a very strong, you zoom out here a little bit, been a very strong area of the market. So it's important, guys, to make sure that you're adjusting to new information, right? And things like this rolling over. The other thing that I've talked about too is whether you're like a Dow theory person, right, where you want to see the Dow go up along with the transports, right? That's obviously the transports have been breaking down now for more than a month. Or if you're a new Dow person, where you like to look at the semiconductors. Oh, geez, did I get caught in a bad trade this week with the semiconductors? I've been pretty defensive this week, but I had a couple trades that really caused me some pain. This one in particular, now this did close at the bottom of value, but I just was looking for a breakout here in the semis, and on the day where it made a high, I completely got run over in this trade. So, what else can you do? Besides kind of you're gonna have bad trades this week, and I talked about this in a number of videos this week. It's not so much skill level. It's just the fact that this is a very difficult environment when you have bad breath like this go on, bad market breath like this go on for 3 weeks now. Right, the chips are stacked against you. No pun intended there with the semiconductors, but that's just what it is, and you're going to get caught. And I was going over this this morning when I was looking at charts. Clearly I had a bad week in terms of P&L because I did a couple trades that just blew up. But I looked at some of the other areas where I've trimmed stocks and where I've gotten out of positions. I've taken stops very quickly, and thank goodness that I did, because if I didn't, I looked at some areas where some names that I did get out of, and some of these had some major breakdowns to them. So if you did that, and that's what I was saying pre-market to members, is that, if you made some of those moves where you got out of some positions, give yourself a little bit of a pat on the back, because this is tough trading right now, right? And you have to keep your keep your confidence in check here. So if you had a bad week, this market is really, really tough to trade. And I think it's really difficult. It makes it even more difficult too when you look at the S&P and realize, oh, it's only down 1% for the day, not even down 0.75% today, but yet some stocks really got annihilated. Nvidia was I mean, look at this stock, right? Goes from market leader to getting completely taken to the woodshed the last couple days. Congratulations if anybody caught the short in this, but even from the beginning of this week, 820 down to 720. We were talking a little bit about this in the trading room. The trend is your friend until the trend is not anymore. So realizing where your support is, which was 770, we did not get that bounce where you should have, right? And that's what normally happens in uptrends. Is usually when you have something like this happen, you usually put in some type of a bull flag or consolidate. I'm not really sure the reason or what the catalyst was behind this full breakdown. The one bar closing inside value, and then today was a colossal move down 4% for the day. Now, how does this shape up going forward? It's too early to tell. Now, there was a VPOC being taken out here, so perhaps a little bit of a bounce is in order. But overall, once you move in value like this, you've got issues. Now it makes a couple other ones, and then we'll leave it here for the weekend, because I'll have a lot of charts to go through for this weekend and for the TTG macro and watch list video. Amazon is another one too, where let's see if it kind of holds in here, right? So this is normally the check back. Right, but we just saw the check back in Nvidia go way too far. So if you look at the weekly chart, like this under normal circumstances would be a nice place to say, hey, this thing came back and is now testing the top of value, and that would be a good place that theoretically would be set up nicely for a bounce trade. But I didn't stick anything on here, so I think the tape just looks a little bit too dicey. Now again, part of this could be for monthly option expiration, but I think there's a few other things at play here too, given how bad breath has been for weeks. All right, so that's where we'll leave it for the weekend for the week. And like I said, I've really tried to kind of as much as possible help traders this week and just reinforce that we're in a very tough tape. Even though the indices have been relatively intact, we've talked a lot about making adjustments. That was something that I really talked a lot about over the weekend. One of the things I said too was that I thought that we would get some type of market hiccup this week with Powell speaking for 2 days, 2 inflation reports. It was just lined up for something bad to happen. So I think we got enough of that, and we got a lot of events behind us. You just have to kind of be patient with this tape, considering that you're going to have some of the biggest names report earnings in the next 2 weeks. Earnings season is really gonna take shape, and I would make sure that you have perspective about that and about how difficult and choppy earnings season normally is. So the good part too is, we're going to hear from all these companies. It's a great time to just kind of observe, and see what names act really well post earnings. All right, so that's definitely in the positive column. All right, guys, have a great weekend, guys, and I'll see you on Monday. Members, you will have 2 videos from me as usual this weekend. If you're not a member of Tribeca Trade Group, you can go right to my market profile, and you can click on here, and you could be a member. You could see, of course, what you get by being a member of Tribeca Trade Group, and go from there. Thanks, guys. Have a great weekend.